What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So the dividend snowball effect is kicking in. I'm at 88,000 right now. Very close to 100,000. I will get to 100,000 for 2024. So that's one of my first goals for 2024. I'm going to go over the sweet spot with a few dividend stocks that I want to get to and go over that. There's some REITs, there's some business development companies that can really turbocharge my dividend portfolio. They have a very good history of hiking their dividend, and I feel very confident in them. So I'll show you how December's looking overall with my portfolio with my dividend stocks. Now, again, the Yield Max ETFs, I haven't loaded up on them completely. I don't feel comfortable yet revealing this to you, but I have a few things I had to sell because of some things behind the scenes. Then there will be some stocks rebought just to cover myself. I had to kind of have a quick emergency fund regarding something, and the stuff behind the scenes I'll reveal to you eventually. So that'll be very exciting to reveal to you. It'll be a huge victory, and I will give some people some shout outs for this victory. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check my dividend snowball portfolio out right now. So right now, my dividend portfolio, the dividend firepower, which I'm calling it, it's sitting at $88,787.52. The all-time return is 63.57%. Today's gain, 83.93. Remember, I went after the real estate sector and financial sector, so they're slowly starting to come back, which is nice. And again, I'm starting to get in the positive. That's not a shocker that I was in the negative because I went after the real estate sector and financial sector. I went after them very heavy. Also, with my IRA, I officially made it to $10,078. So I'm first time ever at the $10,000 mark, and hopefully that'll be 100,000 in the future and bigger. So again, I don't want to work until I drop, but I'm creating my own dividend portfolio, okay? My own retirement pension. I'm using TSLY, NVDY, CONY, and all these Yield Max ETFs, and I'm going to be adding Defiance ETFs, turbocharge my dividend portfolio, and to get this dividend snowball effect faster, and hopefully get to the point where I never have to touch it again. I'll get to 150, 200,000, and then just never had to touch it again. Let the dividends do the work for me. Of course, I'll buy certain dividend stocks, but I'm going to go over the sweet spot with certain dividend stocks and business development companies. And I'm going to show you what stocks I have in my dividend portfolio. So right now, I have 87 shares of Regions Financial Corp, 86 shares of Premier Financial, 82 shares of TPVG, that's a business development company. And again, with a lot of these, I'll go over the sweet spot, but I just want to show you what I have right now. Ares Capital, I'm at 82 shares. Trinity Capital, 81 shares. Barings BDC, 73 shares. Flowers Foods, 71 shares. They've been taking a big hit. Vici Properties, I'm at 69. Wendy's, I'm at 68. CSWC Capital Southwest Corp, I'm at 68. QQQY defines the NASDAQ, I'm at 64. That's an ETF. Fifth Third Bank Corp at 61. Citizens Financial Group at 60. Hercules Capital at 59. Blue Owl Capital Corp at 58. Enterprise Products Partners 58. Ally 56. Bank of America 53. Jackson Financial 53. Essential Properties Trust 51.49 shares. Truist Financial Corp at 51, NSA National Storage Affiliates at 49, U.S. Bank Corp at 47, Brightspire Capital at 47, Coney at 44. I should probably get to, honestly, 400. FSK KKR Capital Corp 44, Fidus Investment Corp 43, NNN REIT 41, Bank OZK 41, CubeSmart 41, One Main Holdings. Wow, I up $524. 41.09 shares, Saratoga Investment Corp 37 0.73 shares. TSLX, 6th Street Specialty Lending, this is one that needs to go up. I'm at 35 shares. Kroger, 33 shares. Pfizer, 33, that needs to go way up. Kilroy Realty at 33. Gaming and Leisure Properties, 32, that needs to go up. Rhythm Capital Corp, 32. Alpine Income Properties Trust, 31. Hormel Foods, 29. Tyson Foods, 23. There is a dip there. I need to get way up there. Blackstone Secured Lending Fund, 23. Innovative Industrial Properties, 22 shares. Corning, 19. Diana Shipping, 18. MPLX, 17.9. Reefy, 17.69. Getty Realty, 17.15. Starbucks, 16.07. CareTrust REIT, 15.63. McCormick, 14.06. Simon Property Group, 13. T Rowe, 12. Omega Healthcare Investors, I don't know how long that dividend is going to be safe. 12.52 shares. Prudential, 11.94. Pepsi, 10. Agree Realty Corp, 9. I need to go up there. American Tower Corp, 9.29. SFL Corporation, 8. Coca-Cola, 8. WP Carey, 7. Starbull, Kinder Morgan, 2. Energy Transfer, like I said, I sold them for a little bit to buy and load up the Yield Max ETFs. I'm still happy about that, of what I did. Hessa Midstream, 1.58. Enbridge, 1.54. Eagle Bulk Shipping, 1.33. Again, I do have some of the shipping ones. And One Oak, 0.75 shares. At One Oak, I need to get a lot higher. So I'm going to go over the sweet spot with a lot of these business development companies and dividend stocks. And with the sweet spot, I'll go over Ares Capital Corp. So I'm going to do a quick dividend analysis with them. I'm going to start with Ares Capital with their dividend history. So 2011, 35 cents to 36 cents. 2012, 37 cents to 38 cents. Little stagnant from 2012 to 2014 at 38 cents. They've been stuck there for a while. And then they cracked 39 cents in 2018, 2019, 42 cents. 2020, a little bit of the pandemic, a little bit of a dividend cut. Then in 2021, they were 41 cents, 2022, 45 cents to 46 cents. And then they hit 51 cents at one point, and they're back at 48 cents. So their dividend growth in 5 years is 4.28%. Now you're going to see a high payout ratio usually with business development companies at 81%. Remember, 90% of what they make go back to investors. Dividend increases in the last 5 years is 5. So if you bought one share, you made $1.92 with a 9.81% dividend yield. So looking at, I did a quick calculation. I'll get my calculator real quick. I'll pop this up. So let's just say 0.48 times 400. So that would be $192. So let's just say 420 times 0.48. Okay, so that'd be about $201. So to get to 420 shares, let's see, their price is 1976. 19.76 times, let's just say 420. So let's just say $8,299.20. So again, getting to the sweet spot with a lot of these high yield business development companies. Imagine if I had 10,000 in there, okay, and just never had to put any more money again, reinvested the dividends, reinvested, threw it on M1 Finance. And then that is going to buy Hercules Capital or Triple Point Venture Group, which I'll go over TBVG. Start in 2015, they were 36 cents, a little stagnant, and then they started to jump up a little bit right in 2023 to 40 cents. So I'll just jump to Triple Point Venture Growth BDC. They're at 40 cents right now. Their dividend growth in 5 years is 1.74%. Remember, the high yielders usually have a slow dividend growth. And 90%, again, what they make go back to investors. So the rule of a business development company or a REIT is 90% of what they make go back. So reporting as income, you have to report that as regular income. So a lot of people are capitalizing on putting them in their IRA. So again, their payout ratio is 73%. Number of dividend increases the last 5 years is 5. Dividend growth in 5 years is 1.74%. So I wanted to provide an example with ARK with the number of shares and the potential. Okay. So again, 40 cents is not too bad. But again, I'm using a lot of these BDCs to turbocharge my dividend portfolio eventually. I'm hoping in 2 to 3 years, that I will get to the point where I don't have to touch anything. And these guys and ARK, and I'll even go over Vici Properties real quick. Vici in 2018 quarterly was 16 cents to 26 cents, and then it jumped to 29 cents. And then in 2020 it was 30 cents to 33 cents to 36 cents to 39 cents to 42 cents. And again, they're going to have a high payout ratio as well. They're a REIT. So their dividend growth in 5 years is 8.45%. I have a lot more confidence in somebody like Vici Properties that has revenue increases. They're just blown up like crazy. Their dividend yield is 5.30%. If you bought one share, you made 166. And price wise, right now, Zach lists them as a buy, and they're sitting at 31.25. So again, if I get to 400 shares with Vici, I'm a little bit more confident in the dividend growth right here. Look at that, 39 cents to 42 cents. Hopefully it gets to 50 cents. So imagine if I had 400 shares there times 50 cents. So you're seeing the dividend snowball effect kick in. And that's why I'm trying to say the 400 shares is kind of the sweet spot for a lot of these dividend stocks or REITs or high yielders, because they can buy me other dividend stocks. I'm hoping that they can buy Coca-Cola. I'm hoping they can buy Pepsi. I'm hoping they can buy Starbucks. I'm hoping they can buy Kroger, because remember, you don't want to always chase high yield. Now, I have a hybrid of high yield, low yield, high dividend growth, high yield dividend stocks, low dividend growth. So I like to have that combination of dividend stocks, because the thing is, look at Apple's dividend and how long it would take for you to, one, afford to earn, $200 quarterly. And somebody like Apple, of course, their dividend is going to hike a lot, but again, their dividend yield is not very high. So I kind of like the 3 to 3% plus range, as long as the dividend is stable. And even with the business development companies and REITs, you have to be extremely careful with your investments, because again, there could be a dividend cut. So do I have a high priority for ARK in them compared to Kroger? No. I would like Kroger a lot better, and I would love to have 400 shares of Kroger over ARK, because that dividend growth will beat ARK in the long run. And I would be really surprised if it didn't, because Kroger generates a lot of revenue. Their payout ratio is pretty solid. And I feel very confident in the lower yield, high dividend growth stocks like Starbucks, like Kroger. I'm going to repeat myself one more time with some of those really good companies: Bank of America, Hormel Foods, Corning, Coca-Cola, Pepsi, Prologis, which I'm going to be rebuying. I had to sell those shares to deal with a few things, and I'm going to start the Prologis challenge again. So you're seeing what the effect is doing over time. So I'm done ranting, but I just wanted to show you the dividend snowball effect kicking in. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so not miss future videos. I will have a video for you tomorrow, and I'm going to jump to my disclaimer. Take care and have a great Monday. So as a reminder, this YouTube channel is strictly for entertainment purposes only. This is not for any form of financial advice. I myself am very transparent with my dividend investing journey. And if you are seeking financial advice, it is best to seek financial advice from somebody that is certified to give financial advice. I am not certified to give financial advice, and I will refer you to a financial advisor anytime you ask for financial advice. Make sure that you speak with somebody for financial advice that is certified. Like I said, I'll repeat that one more time, that is certified to give financial advice or a financial advisor. Investing in the stock market is a huge risk. So you have to be aware of the risk when you invest in the stock market. You can gain money, you can lose a lot of money. So make sure that you do your due diligence. You take care and have a great Monday.